Yesterday, the dollar didn't spike, crude didn't explode, there was no big macro shock. Yet, the market still felt tense. No confidence, no momentum. If nothing was wrong, why does everything still feel fragile? Because markets need shocks to feel the pressure. Pressure builds when risks don't go away. Stay till the end. Yesterday's calm macro data exactly why the market stayed uneasy. Let us start with what people expected. They expected relief. A falling dollar, cooling crude, some signal that inflation pressure is easing. But that didn't happen. Instead, both stayed firm. Firm is not dangerous, but it is restrictive. When risks stay alive, markets don't celebrate, they hesitate. A firm dollar doesn't scream danger, but it quietly tightens the global liquidity. It pulls the capital towards safety, it pressures emerging markets, it limits the aggressive risk taking. That's why, even without panic, markets feel heavy. The dollar doesn't need to rise sharply to hurt the risk appetite. Crude didn't spike, but it also didn't cool. For an economy like India, that's important because crude feeds fuel prices, inflation expectations, RBI decision. As long as crude stays firm, inflation risk stays on the table. And when inflation risk stays, central bank stays cautious. Yesterday's macro setup gave RBI no comfort, no reasons to ease, no reason to inject the liquidity. Now that's critical. Markets don't move on what happened. They just move on what can't happen next. And yesterday told the market, the money is not coming soon. That's enough to freeze the momentum. When macro pressure doesn't disappear, markets behave in a specific way. Upside becomes cautious, downside becomes controlled, money doesn't exit violently, it just slows down. That's why rallies fade, dips don't excite, confidence disappears quietly. Retail looks for events, but markets often react to conditions, not events. Yesterday wasn't about what changed, it was about what didn't improve, and that's harder to notice. This phase saying one thing clearly: growth optimism is capped, liquidity is cautious, risk appetite is selective. Markets aren't pricing the disaster, they are pricing patience. When the dollar and crude stop being problems, markets breathe. Yesterday showed us there are still problems, just the quiet one. Big market moves don't start with panic, they start when pressure refuses to